Hello my fellow freedom builders and welcome back to the channel. Now I have promised you yet another video of these 9 potential exploding stocks that I've been looking at, but I lied a bit to you because it is actually 4 today, so you'll get 3 plus 1. That means I'll have to talk a bit faster, but that's how it is. Welcome back to the channel. It is a delight to have you here, and let's jump right into it. Remember to subscribe and like and all that jazz with the buttons down under the video. Now, as you know, we are going to have a look at some stocks. Today, 4 of them. They are going to be quite small in market cap, meaning they can be a bit more volatile and so on. If you haven't seen my first 2 videos, what I'm looking for is a trend, a good solid company with a trend in the fundamentals and a trend in the price. That's pretty much how basic it is. So let's jump right into it. And the first small company we should have a look at today is something called B&G Foods. And if you're from Europe, I'm pretty sure you've never heard about these brands before, at least I haven't. They are making frozen foods, canned vegetables, oatmeal, cereal, all sorts of stuff. And you can hear it in your names here: plant-based snacks, cream of wheat, Dash, Green Giant, Ortega, and so on. They have a lot of brands here, and yeah, this is pretty much what they do. They sell some shelf foods, some frozen foods, and if we look at the fundamentals here, we can see that they are a very solid company, both on the quality and momentum, but also on the value, which is actually quite amazing. Not many of these small growth companies have a high value as well. So we can see they have a PE ratio of just below 15 and a PEG ratio at 2.6. Now, as you know, the PEG ratio is the current PE ratio divided by the expected future growth of the earnings per share, and this is 2.6, and that is just in the high end, I must say. But I like it to be below 2, but that's how it is. 2.6 can be okay. When we look at this here, we have some good EV to EBITDA, price to free cash flow. That is great. We have a return on capital and so on. Operating margins is great towards the industry and the market. Petrosky scored 7. They are in the risky end here. And let's just have a look at the numbers in a second. You can see that their earnings per share growth has been a bit jumpy. But from 18, 19, here in 20 is expected to be high again. We see a clear trend here, so that is okay. Expected a bit of a slowdown in 21. When we're looking at the free cash flow, that as well is jumpy, but here in trailing 12 month, it has been looking okay. Now, they're paying out a dividend, and I'm not really sure. They're paying out 6% in dividend, which is actually very high. And in companies like this, I'm a bit against it, to be honest. I'm not. It's okay to receive the dividends, but I'm not a pure dividend investor. And as you can see here, they're having a free cash flow. Now, the trailing 12 month is okay high, but let's see here. They have a free cash flow of 6.5 cents, but still paying out $1.90 in dividends, meaning that they don't have above 1 in dividend cover. They have to go out and find the dividend money elsewhere. The reason why this is as high as it is because we are not looking at free cash flow, but at the earnings per share. But still, I like this dividend cover to be 2 or above. So if you're a dividend investor, I would not count on this in the future. It's simply not stable enough. The debt here is fairly stable. The interest coverage is not extremely high. I like that to be 5 or 10 or something like that, but the current ratio is okay. Sales growth and earnings per share growth here in the last quarter, I think this is looking good, and the analyst has it at about a hold here. So all in all, it is an okay, at least for a shorter term swing trade. Now, my shorter term swing trades tend sometimes to turn into longer term trades. And now you might have heard me saying that you're never allowed to shift time frame in a trade, but you are. If you're in a short-term trade and it turns out to be profitable and the trend keeps going, then it is okay to prolong the trade and to say, yes, now instead of holding it for a week or 2, I'm holding it for a month or 6 months. Where it is not allowed is that if you're going into a trade and it is a short-term swing trade and it goes against you and you're sitting on a loss of 10 or 20%, it is simply forbidden. It is not allowed. There should be a stock investment rule or law against it. It is not allowed to say, oh, then I'm just a long-term investor. You have to follow your rules, and if it hits your stop loss, there's no turning back here. As you can see, market cap just $1.6 billion, 1.6 billion euros. And that is not big, meaning it can be a bit volatile. But here we can see it is coming out of a very long downtrend that has actually lasted, 3.5 years, something like that. And it is building momentum upwards here. Had a bit of a break for a month and a half here and is now moving. As we can see, it is bouncing well off the 20 SMA here. And it is like it is bouncing again now. Sometimes I do accept that it doesn't get down to kiss the 20 SMA here. We can see that the RSI is well above the 50 line. It is in a green zone, RSI above 50 and the CRS above its 2 moving averages here. So basically this is a very low risk trade in the case that you can get in here around 30. You can put your stop loss somewhere down here. As you know, what I'm looking for is to get out is a breakdown the 20 SMA, trying to get up above again and then turning down, especially with the RSI here below the 50 line. That is what I'm looking for, meaning that I would probably be able to get out here with around after 8, 10, 12% risk somewhere down here. And in many of these cases where it goes well, we have a huge upside. So I can easily live with that. These small losses here is just a part of the game. If I'm taking 10% loss here, that's just the price, the ticket price I'm paying to be able to enter the train ride when it really goes up 100 or 200 or 300% sometimes. So B&G Foods, that's the first of them. The next one we're going to have a look at today is something called, as you can see here, MI Homes. And MI Homes is basically just a builder of single family homes. They design it, construct it, market it, sell it. They also sell some mortgages and insurance. As you know, with both the auto sales company and the boat sales that we had the other day, they are making a good business out of also selling some mortgages, insurance, maintenance, all that service packages around is getting a bigger and bigger business. So these homes, they look quite nice. Of course they do. It is a website. They have to sell it, but they seem quite large here. They might also sell some smaller houses. I'm not even certain. But as you can see, they have been building for more than 40 years. Built 120,000 homes in 15 markets and primarily located in the eastern part of United States. Now we saw the numbers of new applications for new homes built in the numbers yesterday, and that was up quite a lot more than expected. I think it was up something like 18% month on month or something like that. Expected was 3%. So that might be a good indication that more people wants to buy more homes. If I can figure out why, I don't know why. It is in the current situation, I would not dare starting to build a new home, but it can be one of the reasons that people are simply, as far as I can tell from the stats, people are fleeing from the big cities and moving towards more rural areas. So there might be something about building homes there. I have no idea. That could be an explanation. Looking at the numbers here, again, we see a stock rank of 99, meaning it is actually at the top of its class. The quality is only 64. I would like that to be above 70, but the value is very high. The momentum is very high. If you don't know this tool, it is Stockopedia. There's a link to it below where you can get some discount and stuff if you want to test it out. But as you can see, they have a P ratio at only 7 with a PEG ratio of 0.6. So that is actually a very fair price for future growth. We see here they have some very good numbers in the price to free cash flow, the EV to EBITDA, and also return on capital is great and operating margins here. We have a Petrosky score at 6, and looking here, what do we see here? We see a growth trend in the earnings per share that is just like I want to see it. Look at the numbers down here, what they're growing it with each and every year. And I know it has been some good upwards trending years, and we might enter into a bit more of a crisis now with a recession and everything. But these people, they seem to have a very good control and management over the company. Now, there have been some negatives on the free cash flow, and there can be a number of reasons for that. But it is growing again and going into positive, so that is great. The net debt is going a bit down. They can easily cover their interest here. Sales growth, great. We can see that the analysts have gone from a hold to somewhat of a buy here, so that is great. And when we're looking at the charts, we can see they are in the green zone. They actually just entered the green zone a few weeks ago back here, meaning that it is a fairly new trend, whereas we both have the uptrend and the better performance than the market, than the overall market here. So what we're looking at here is basically a very good trend on the weekly chart and a trend on the daily chart, where first of all, in the beginning, it was down testing the 50 SMA here, but now it can easily keep above the 20 SMA. So that is what we're looking for. It had a very tiny loss yesterday. Some would say that they would wait to see a break of these tops here. I'm not too concerned about them, but if you want to, you can wait until they are broken and then wait for the retracement here and then get in a bit later, but at a bit more secure point. All right, on to the next one. And that is something called Renter Center. I must admit, I have never heard about it before. It is they do have some international exposure, but what they do is actually that you can lease pretty much anything here. No matter what you need, furniture, appliances, computers, electronics, smartphones, no matter what, you can rent it or you can lease it here, meaning that you can get it. I'm not even sure if there's a small down payment, but otherwise you're just paying a weekly lease. And I do see that this is great times for shops like these, because right now there are a lot of people that still need some of these stuff. Of course, maybe a sofa or an armchair or something, you might go without that. But kitchen appliances, these consumer durables, the Whirlpool here, top load wash, it is something that you need if it is broken at home. And you don't have the money to buy new, so you are easily, could I say, tricked into leasing this. Because when I say tricked, of course they're not cheating anyone, but now this looks fairly cheap, $20 per week. But if we take the case with this smartphone, which is a Samsung Galaxy A70, you can see $20 per week. And yeah, if you should buy it at cash price, it would be around $600. But when you pay it over 52 payments, meaning a year, you're paying, 50-60% extra. So what these people actually do is that they're selling you a product, and because they finance it, then after a year, they have gotten a price that is 50, 60, sometimes 100% more than you should have paid up front. So it is very expensive to be poor, and these people are living quite nicely from that. And not that there's anything wrong with it. If there's a market for it and it is legit, then just go for it. But this is pretty much a company that builds right into the way at least the Western society is built, that you just need to buy a bunch of new stuff. Doesn't matter if you can't afford it, you just have to have it. And if you can't afford it, you'll just end up paying double the price, but you get it right now. That is this instant gratification syndrome that we live under. Why should we wait a year to get a new laptop when we can get it right now and just pay an obscene amount of money for it over time? But what these people actually do is that they borrow you the money, and they are charging you something like 50 and 60% in interest for it. That is a good business. And what they often do is that they sell on the debt to someone else, but that is another part of the story. But of course, there will also be a lot of people in the upcoming time that cannot afford to pay. And I'm not sure how the legal status is then in the United States, if they can come and claim back the laptop or the television set or whatever, or if the money is just lost. But with a 50, 60, 70% interest in a year, they can afford some people not to pay. Looking at the numbers here, We can see here that yet another stock rank of 98. As you can see, I'm going for these stock ranks of above 90 when I'm looking at these. A market cap at only 1.5 billion euros here. We can see a PE ratio around 11, no PEG ratio, and that is because they're expecting a small or a 12% drop in earnings per share here, so there's no PEG ratio there. What we can see is that the earnings per share normalized here is fairly stable. They have been in a slump in 15, 16, 17, but then in 18, 90, it really starts to pick up speed. And 2021 seems like a stable couple of years. Of course, as I mentioned, these sort of businesses will also be hit by the current situation. But they seem to doing quite fine right now. Petrosky scored at 7. When we're looking at, they're actually paying out a dividend of 2.5%, 0.8% in 19, and expecting 3.4% in 20, with a decent, actually a very good dividend cover here, I would say. The debt, they have been bringing their debt down, which is great. So they have an interest coverage way on the good side of 10, and that is fairly stable, I think. The analysts are saying buy, so that is an okay sign. And when we're looking at the charts, we can see that it is in the green zone. It has broken up above a top here and a top here. And well, they were down bouncing here, and as you can see, it is using its 20 SMA now to bounce up here and here. And right now they are actually in an area where they're just picking up their breath again from speeding up here. And I expect it to go quite a lot further up here if they keep producing some decent result. So that is another one, and we will have the last one for today, and that is something called Tempur Sealy, and you might know them. They are making all sorts of bedding products. They develop them, they're manufacturing mattresses, pillows, all sorts of stuff. And it is these funny thing that where the mattress is actually taking shape from your body. It is some sort of foam that you're on, and I've actually had one of these beds and some pillows, and they are very comfortable to sleep in. So they have a lot of products, a bit high-end products as far as I recall, but very nice products. And of course you could say, is it the time for these high-end bedding products right now? They are selling them globally, so this is not just a US-based product or a company. They are selling them on a third-part salesman basis in a lot of the world. But let's have a look at the numbers. We have again a stock rank at 97, 90 in momentum, 95 in quality, 52 in value. Don't care too much about that one. PEG ratio at 14, PE ratio at 14, PEG ratio at 0.7, with an expected earnings per share growth at 26.5. That is very decent. Down here we can see some very good return on capital. Return on equity is 73%, amazing. Petrosky scored 8. Just in the cautious zone here at the Altman C. Doesn't necessarily mean too much. When we're looking at the slope here of the earnings per share, that is just that like we wanted to be. A bit of a slump in 17 and 18, but then picking up speed again. That is very nice. Free cash flow going up in the right direction. That's what we like to see. Net debt is fairly stable. And as we can see here, only a 4.45 in interest coverage. That's not my favorite. And the current ratio is below 1, meaning that when you take their assets and divide it by their liabilities, if you should liquidate the company today, that would actually be a little net loss there. So that is something, if I were to be in the position for a longer time, something that I would keep my eye on. So this is looking fairly well, and the analysts are saying, please just buy it. It is looking good. And when we're looking at the chart here, we can see it is in a fairly new green zone with both the RSI and the CRS here above their respective lines here. There is a single top here on the weekly chart, but as you know, I'm not looking too much at that. Let the RSI just dip a bit down here. Let the price either go down to the 20 SMA or take a little rest here, so that the 20 SMA can catch up and then explode from there. So Tempur Sealy here, the mattress and bedding product company, is the last one today. I hope you found some inspiration in these 4. It was the B&G Foods, the MI Homes, the Renter Center, and the Tempur. Now, this is just for inspiration. It is not buy and sell recommendation. I'm not a financial advisor. I am simply just a YouTuber telling you about what I look for in the market. That's all for now. Take care of yourself and your money out there, and I'll talk to you again soon. Bye for now.